is a brand new day. Welcome. My name is Monsivino Valentine. I am the co-founder of the Pride FX movement. Now, if you have not subscribed, please do subscribe. Hit the like button as well as the notification bell so that you can receive future content we do have on this channel. Just a point of note, if you guys can please help Lesiba obtain his BMW back. He was hijacked by Kind Point yesterday. It would be nice to help him and look out for his car. This is the registration number as well as the number plate. Just help him get back his car. If you do know the whereabouts, help him. He is one of the people that helps a lot in the Forex game. He's always motivating people to take on the risk and also help you to obtain success in Forex. Okay, so let's get back to today's video. We are still basically speaking about time frames, and the time frames that we were speaking about in the past was the 15-minute as well as the 1 hour. So just a recap. On part 1 we spoke about support and resistance. In part 2 we spoke about support and resistance breakouts. In part 3 it was the 15-minute time frame if you'd like to trade fundamentals. In part 4 we spoke about how you can use the 1 hour time frame and what personality you need to have for the 1 hour time frame. And so today we are speaking about the 4 hour time frame, and the 4 hour time frame is for people who does not have a lot of time during the day to look at their charts but would like to trade. And so this time frame, it does give you a lot of information. It gives you the trend, it gives you the range, it tells you exactly what to look for. It's more like a bird's eye view on the market to see which trends are setting up, how is trends relating to each other, and they're also a very good thing to use. So the personality you need to have for this is someone that does not have that amount of time. Okay, because if you do have the whole day and you're trying to analyze on the 4 hour, genuinely you're not going to have that amount of patience. The opportunities are much less on this, but they are profitable. Okay, so for the personality, it's for someone who can only look at the charts maybe once or twice or even 4 times a day, just to see what is actually happening in the market. So the 4 hour time frame is more up for someone who doesn't have that amount of time, such as a day trader. Okay, so let's get straight into today's video. And so we are still basically speaking about ranging markets, and the more we're speaking about it, I can see there is a lot of people that eyes are starting to open because of what they are starting to see within the ranging markets. And the more you are seeing this, the more you are actually taking in the information from ranging markets and how to look at ranging markets. Okay, so let's get into the video. And so we're going to speak about this range over here, and we can see that the market had a rally up to the upside, and so you guys already know what we are speaking about. Okay, so the rally to the upside, and then what we are looking for in that is obviously it is obviously known to people that we are looking for the reversal of that rally of that run. Okay, so the reversal of this run, we can see from here it stopped over there. Okay, so over there we had our first confirmation, and then we had another one over here, so we can see that that is a reversal, so we're going to add that in. Okay, and then we had this high set over here, so we could use that as well. So what we need to do from there is just highlight. If you don't know how to use support and resistance, I would suggest you go and watch the 1 hour time frame. I show you exactly how to look for these levels or these other blocks and how to draw them perfectly in to what you are looking for. So I'm just going to draw these in, and I'm going to also fit them in properly. Okay, so we can see over there it's still there, so I'm just going to add that in just like that. And what I can also do is just remove these lines so that we don't have all that information. And if you have too much information on your chart, it just doesn't look right. It looks as if you do not know what you are doing, and sometimes it can confuse you when you are looking for future trades, because you are looking at too much things happening when you have analyzed the market. Okay, so we had that over there, and we can see from that point we had a sell. Okay, so in that sell we can also see it breaks through this mini support over here. So that is another entry for us. And what I said is that you can actually just place your stop loss. So if you did take that entry over there, your stop loss from this point would move to that point, so that you can break even if the market decides to reverse. Okay, so you had one good profit and one less loss. Okay, so that's how I look at the markets whenever I am trading. Here we had a buy setup, right? So we had a buy trade over there. We can see that the market went over there, and then the market reversed over here, right? So it never went to our exit over there. So here we can see the market comes back in. We could have taken our profit over there, and then we had another trade come in. So we will be speaking about candlestick behavior, and how to make sure that you do get the best out of those candlestick behaviors. Okay, and so here we have another buy trade. We can see it breaks through our mini resistance here, so we could have had that as another entry. And as you guys know, what we would have done is just place our stop loss just below that point, right? So it would have been over here, right? And so we have another entry. So we had exits over there, and then we had a sell entry over here again, and we can see that the market broke through and created this new support over there. So we can add that in for future references if we want to enter more. Okay, so let's just add that in. The market reversed over there, and so we would have taken a setup over there. Like I said, if you do see a breakout, you would have taken your trade over there, and we could have put our stop loss. Once we take our second entry for the sell trade over here, we could have taken our stop loss over there, and we can see that that was in profit. The market came back up, so we had our first loss but with profit. So we had a break-even trade, and obviously with profit, because when it came there, we can see the amount of pips we accumulated from there, and we can see the amount that we have lost. So it's not that much, but you have made profit. And then once the market goes back up to this point over here, right, we can enter for a sell, because we are still ranging. There's no higher highs, there's no higher lows. And then here we had that sell. We can see where it went to. It broke through over there as well, so we could have taken another sell over there, and obviously where our stop loss is over there, and we can see that the market went back there. So in our exit area we had another buy trade, and then the market crossed over, but we can see with the next candlestick it does come back down. So we could have closed that and taken this buy trade over here. Here we went back up, and just notice as well that there is higher highs being created, higher lows actually that's being created, and we can see obviously from that we're anticipating for a breakout of this, right? And then obviously the market went up to that point, and a key reversal has occurred again. So whenever you see these key reversal levels, you want to highlight them, because it tells you that the market is resting at some resistance over there, right? So all you can do is just highlight that as well into your chart, just like this, and we can see that from there the market fell. And so you can use your support or all these levels to continuously enter trades, right? So from here we could have entered there, right, with our stop loss obviously being just below that point. So our stop loss would have been just below this point, so that if we do have that break even again, we could have closed our trade there. Here we can see the market drops into this area as well, so we could have taken another trade over here with our stop loss just where we have left it before. And so now we have 2 trades in profit. So if ever the market did decide to reverse, we would have made profit plus a break even with these 3 trades that we have taken. And we can see that the market successfully goes to our exit point, which was our take profit over here. So all we can do is show you that that is our exit, and so we're deciding to take buy trades again. Here we have our first buy trade. Here the market breaks through that mini support or mini resistance. We have 2 trades, and so obviously you know where to place your stop loss. It's just below that point, which is over there. That is the breakout there. So we have another trade, and over here we had another trade. So we have 3 trades running, and like I said to you, if the market does come to our stop loss, which would have been here, we could have had a break even over there, right? And then last but not least, we do have a stop loss that was hit over there, and we didn't get to our exit. Always remember that it's not always going to be smooth sailing. We wouldn't have known that the market would have continued to come back down. But what we can see is a M formation. We will be speaking about M formation in future videos, but we can see that the market came to our resistance area, which is in line with what we have been doing so far. And we can see that the market drops past our first support, our second act of support, and close to our exit. So we would have had a break even as well as profits. Okay, and then here we had the market play out today, and we can see that that has happened. Now during this time as well, we should have been taking note of this, right? Lower highs has been created. So there's our highest point. There is a new lower high. Here is a new lower high. Here is a new lower high, and this is a new lower high. So we're expecting the market to break the trend soon. So all you can also do is, while you are actually trading in these ranges, just continuously look for this. Okay, just continuously look for those trends, right? The selling trends, and we can see that that is occurring. So just to include more into this, we can see why the market decided to break that trend, okay, that range, and went for a sell. Okay, so that's it from me, Montivino Valentine from Pride FX. Have a wonderful day, enjoy the rest of your week, and we will meet up in the next video.